Hey everyone, this is Rob Keynes of goldsilverpros.com. It is Tuesday, February 2nd, 2021, and I wanted to turn my attention today to gold because I think gold is going to be so important to the world going forward as we look at potential more economic stress and as we look at the amount of money printing going on in the world. We'll have more on that in the presentation later. I've got an old gold mine background here to get into the spirit of this presentation. I think we may have found another big gold discovery. There's a company up in Canada thinks they may have found it. So we're going to get into that. But we're going to talk about why gold is so important and why we need to really pay attention to those companies that are able to find additional gold. Title of the presentation is, will 2021 reverse the 20-year trend of decreasing gold reserves, or gold discoveries, I'm sorry. We've talked about this on the channel a lot. There haven't been major gold and silver discoveries in the last couple of decades plus, but we think we may have found one in Canada, and we're going to take a look at that next. Let's talk about why gold is important first. Here is a chart from Crescat Capital. Now, all the links to all the references I'm using in this presentation will come at the very end of the presentation. I'll go to that slide and show you the links and give you a second on the video if you want to pause and copy those down. But Crescat Capital late last year, put out this really good presentation, and one of the cool charts from this presentation, it's basically self-explanatory. It's this gold supply cliff that's coming really in earnest in 2030, but starts in 2027. We start to see this fall, actually in 2025, we start to see this fall off, but it gets really steep 2028, 2029, and 2030, to where the proven improbable, the highest quality gold reserves we have in the world for the top 20 global gold producers, literally falls off a cliff approaching zero in 2039. Ladies and gentlemen, that is not very far away. That means that anybody that finds sizable gold reserves that are economic is going to do well. These miners are going to do well. Not only that, but the gold price is expected to rise a lot, meaning the profits for these gold miners are going to go up, and what is considered economic is going to get more generous. So a lot of gold reserves right now that may not be profitable are going to become more profitable. So anybody finding good gold reserves by today's measures, those are going to be outstanding gold reserves, very economic gold reserves when we get closer to this gold cliff. Moving on, we have some bank predictions for gold in 2021. The first two I think are very conservative. The third one may be about right, and I'll share that with you in the next slide as to why I believe that to be the case. First, we have Wells Fargo making a prediction late in 2020 that they expect to see $2,300 gold in 2021. Goldman Sachs matched that prediction of $2,300 gold in 2021. Bank of America exceeded it, went really bullish on gold and set a $3,000 gold target in 2021. Are we sure about all this? Are we sure gold is going to go up? What are the major reasons why? Well, think about what happened in the shutdowns. We had problems in the economy. We had supply chain problems. We're starting to have inflation problems. I've been covering that on my channel. Gold does well during those times. It also does well when you have negative real interest rates. And we had negative real interest rates all over the world last year, even in the US, because the interest rate on the bond, let's say it's about 1% or so right now, is less than the CPI inflation. That's a negative real interest rate. Nominal interest rate's 1%, but 1% minus 2% inflation is a negative real interest rate of 1%. And of course, we had about $16 trillion in bonds across the world, especially in Europe, but in other places that were negative yielding, negative interest rates, which means you actually paid for the privilege of owning that bond. You did not receive a positive yield on that bond. So during negative interest rate environment, gold does very well. And we should expect some coming inflation because according to the Fed, the St. Louis Fed, the M1 money stock went vertical in 2020 because of the shutdowns and all of the money printing that had to occur for them to prop up the economy and keep it from crashing during all of the shutdowns. From 1913 to 1920, the Fed had created about $4 trillion of M1 money stock. They added $3 trillion last year alone. That is what we call a hockey stick vertical move. That is indicating coming inflation in the economy. So we have coming inflation in the economy. At the same time, gold is going to start hitting its supply cliff, meaning we will have less free available gold for people to invest in, for the banks to hold as tier one assets on their balance sheets, especially at a time in 2021 when Basel III liquidity requirements are getting more strict and we need more tier one assets in the system. We're going to hit a gold supply cliff. So I think that's why I think these prices are conservative for 2021. I think Bank of America may be about right at 3,000, but definitely going 2022, 2023, we expect this to continue to march up because of the money printing and the economic problems that we're having right now. So let's talk about what is a recent big gold find. Kirkland Lake owns Fosterville out in Australia. I'm going to compare a new gold, potential gold find in Canada with Fosterville and why this could be really big for investors who are maybe looking at these big type of deposits. If you want to add that to your portfolio, if that's what you're looking for, I'm going to give you a potential option here. Now, I'm not your financial advisor, but I like to do research and present options to you. And if they look appealing to you, for you to go check them out. Fosterville had 2.1 million reserves at 21.8 grams per ton gold. Now, I want to put that in perspective. There are several companies I follow that mine here in the United States and across the world, other tier one districts like Australia and Canada, that can make money at about a half to about 0.6 grams per ton gold. Fosterville had 21.8. So it's about 40 times what you really need at today's gold prices to do it profitably, especially if you're doing surface gold or open pit mining. Now, underground gold gets a little bit more expensive, but anything near surface, you can do it about 0.5, 0.6 grams per ton if you have a really good mining crew and a really good process. The production in fiscal year 2020 was 640,000 ounces. The guidance for this year is about 400 to 425,000 ounces, and then it's decreasing. You see it go down to about 325 to 400,000 ounces the next 2 years. What is that telling you? We're hitting the gold supply cliff. Okay, remember the gold supply cliff, these big deposits get depleted very quickly and it's falling off. And that's what's happening to Fosterville, okay, owned by Kirkland Lake. So if we can find another Fosterville to start replenishing those reserves, it's very positive for us because we know the money printing and the coming gold supply cliff, we need to replenish those gold reserves in a rising gold price environment. So here are some statistics from Fosterville. They've had strong production growth up until 2020, and they've had low all-in sustaining costs. For those of you not familiar with what AISC is, as you can see here on the right-hand side of this picture, all-in sustaining costs is basically cash costs, which is the mining cost to get it out of the ground, plus some measure of administrative and general fees, general administrative, which is an accounting term. Now, AISC is fairly fluid. It can be calculated in different ways by different companies, but it is one of the best industry measures of about how much it takes to get gold out of the ground. If you want to be really conservative, add 10% to that, another 80 bucks, and you're looking at about 885 to cover some other costs that companies may incur that may not be in that G&A and that cash cost equivalent of AISC. So in any case, at gold at 1850, 1900, still very profitable on these types of mines that have these, 15, 20 grams per ton. You're making $1,000 an ounce today. And if you go up to $2,300 gold and $3,000 gold, then you're making a lot more on each ounce pulled out of the ground as profit. That profit hits the bottom line, the companies, and it's a leverage play because it's all pure profit after the AISC, so that it really increases the value of those shares of the company. That's what we want to pay attention to. We want to look at companies are finding the bigger gold deposits that have these 15 grams per ton, 20 grams per ton, and expect to have similar geological characteristics to Fosterville. So you know that they're going to get it out of the ground at about this $800, $900 number. And in a rising price environment, the banks are predicting $2,300 to $3,000 gold. These type of companies that do those things are going to potentially make a lot of money and can be worth a lot. So we're going to look at one. The company that I want to bring to you today is called Newfound Gold Corp. They have the Queensway project out in Newfoundland, and I'm going to give you some basic information on it. I want to draw your attention over here on the left of this screenshot to their drill results from the Keats zone. 92.9 grams per ton gold over 19 meters, including 285.2 grams per ton over 6 meters in hole NFGC-19-01. Now remember, Fosterville was 21.8 grams per ton gold, a lot of money, only about $800 an ounce to get it out of the ground, 600,000 ounce production. This is 92.9 grams per ton. in this drill result. They also have a 22.3 grams per ton over 41 meters. That is a fantastic width in that zone. I mean, 19 meters is pretty big width to have 92.9 grams per ton. 41 meters, 22.3 grams per ton. And that includes 68.6 grams per ton over 11.3 meters. That was in hole NFGC-20-23. Now, they need to do some additional infill drilling to confirm how big of an area that's found. But when you start finding these, you just start putting holes in the ground and finding these drill results, you know that there are some very rich gold deposits there. They've got another one, 41.2 grams per ton gold over 4.76 meters. That's fantastic. First of all, that grams per ton is about double what you saw average at Fosterville, and 4.76 meters is nothing to sneeze at when you're talking about a gold drill result. They also, within that, have a section that's 25.4 grams per ton over 5.15 meters. Again, not bad at all. That's a whole NFGC-20-17. But what's really cool about this is the newfound gold Queensway project has similar geologic settings, and we'll see that here in a moment, as the prolific Fosterville mine in Australia. It's an epizonal high grade gold mineralization, very similar to Fosterville's Swan Zone. And that's what's really important. We'll get into that here in a moment. I've got some screenshots for you of that. It's really going to show how it's very similar to this Fosterville project that we showed you at the beginning of the presentation. Some other good things about this company, that 67 million of working capital. They're going to conduct a 200,000 meter drill program over the next year to 2 years. 200,000 meters, if you're following gold companies, you know anything about mining, people get excited about 10,000 meter drill programs, 15 to 20,000 meter drill programs. This is 15 to 20 times the size of that meter drill program, and that's where they're going to use their working capital on. They're really going to go after the gold in the zone and figure out where it is and start to delineate their gold resource. And remember the Lassonde curve by Pierre Lassonde. Exploration companies that do a lot of drilling and start seeing these drill results tend to rise in price as investors get really excited. So they're at the beginning of that first profit zone, and the gold exploration companies where they start getting drill results and they're impressive, and then they embark on this massive drill program. They start producing more news, and then the value of that company goes up in investors' eyes, and they get excited and get in, and they start attracting some potential institutional investors that start following the company. That's exactly where Newfound Gold Corp is. So this is kind of, hate to use a term, but like ground floor opportunity or beginning of the exploration cycle is probably a better way to say it, where you're going to get a lot of news excitement when they start embarking on a massive drill program like this. So stay attuned to the news on Newfound Gold Corp's website. I think you guys may be impressed over the next year as they embark upon this. And it's a good time if you're interested in exploration companies to get in. Now, the mineralization comparison that we were talking about. Here are two pictures, left and right. And on each one, the left side is the Queensway project. That is the Canadian project I'm talking about. And on the right side is the Fosterville mine project. That's the one out in Australia. You can see nearly identical mineralization. On the left side, you can see the core from Eagle Zone, Fosterville mine, and from the Keystone Queensway project. It's intense quartz stockwork. I'm just reading off this on the bottom with relic black shale fragments from each deposit. Specks of visible gold are present in quartz veins in their selvages. Gray patches contain fine-grained antimony sulfides. Belangerite on the left and stipite on the right. Now, the main thing to pay attention to is when you get quartz. When you get quartz and gold together, that's a good thing. Gold tends to follow quartz. We see gold deposits after quartz. You guys watch those TV shows on Discovery about where they're finding the gold. When you see these types of mineralization patterns of quartz, that's what you want to go after. Now, on the right-hand side, you've got the Keystone Queensway project on the left, and on the right, the Eagle Zone Fosterville mine. The comparison of quartz veining displays relict banding from each deposit. Dark material at the bottom is relict shaly material. Such banding is probably an original texture resulting from open space filling of quartz sulfides and gold at time of deposition. Open space filling is indicative of shallow level deposition for both deposits, meaning it's at surface. That's where you get your more profitable mining. So you can see these deposits are very similar. And these are from drill cores that they pulled out of the Queensway project and compared to some of the drill cores at the Fosterville project out in Australia. And you can see some similar mineralization. You can see visible gold. And that's what you really want to look for. And that's what's got so many people excited. And I'm going to show you a list who's really excited, who's invested in this company in a moment. And it's an impressive list of companies that are in there. Now, here is the Queensway project. We're looking at the Dog Bay line. That is the red line here on the map. Queensway is at the bottom left of this line. And there are some really other good finds along this trend. This is what we call on trend. The Queensway project is on trend. And there's some other deposits there. So the Dog Bay line is a significant structure formed at the closing of the Epitus Ocean and can be found on both sides of the Atlantic Ocean. Newfound Gold identified this structure for its significant gold potential and consolidated land holdings. A number of large gold systems have been found along these major suture zones, including Deladrian Gold, Marathon Gold, Oceana Gold. So other companies are finding gold on trend, and that is a good sign. It means you're not starting from the beginning and just drilling holes and playing battleship with this thing. You've had some good drill results. You're on trend with other companies and other exploration. That puts you forward in your thought process about where to drill and that you're going to have success. This is not virgin territory. There's other projects out here, and that's good to see that other companies are finding really good deposits out there as well. I wanted to show you what they found at the Eastern Pond target. It has two areas where till results, till type of exploration, has shown highly anomalous total gold grain counts. That's highlighted down here in yellow. One till sample yielded 216 gold grains. 163 of them, 75%, classified as pristine, meaning really good looking gold. The second cluster of samples yielded up to 155 gold grains, 82% of them pristine. So they're estimating that the subcrop samples may have 15 grams per ton metric gold. That's pretty close to what you see at Fosterville. And again, that is about 30 times what you need on a surface gold deposit really to make money. So 30 times what you need to start making money on that. That's a really nice find down here at the Eastern Pond anomaly. On the right-hand side, you can see that Eastern Pond anomaly down at the bottom of the picture. So they're findings that they're starting to explore out on that trend, on that Dog Bay line we saw in this previous exhibit where we have that red line, the Queensway project. They've got the Eastern Pond now. They're starting to find some more till samples. So they're going to start to put some holes in the ground there and see what they have. Here's some other really good finds at Queensway. At the top, you'll notice 45.3 grams per ton over 13 meters, 29 point, I'm just going clockwise here, 29.3 grams per ton over 2.4 meters, 25 grams per ton over 16.9 meters. Moving up 10.3 grams per ton over 6.1 meters, 40.1 grams per ton over 4.1 meters, 7.31 grams per ton over 2.2 meters. They're finding stuff, and notice how it's on different vein systems. They've got 4 to 5 vein systems here, which they're punching holes in on those veins, and they're finding really, really, really impressive results. You can see here at the bottom in this release, are the ones that they're highlighted on the middle table that's in red, and on the left right over there, the previously reported, you're finding some really good drill hole results as well. Good drill hole results on multiple veins on this property right along that fault zone. That fault zone is where you're going to see that quartz and that gold deposited. And again, it's on that Dog Bay line. It's on the trend line where other companies are finding that as well. This is the type of stuff you want to see. And again, at surface, you can make money most places about half a gram per ton or gold or more. I've covered companies that have done it. You're looking at 40 grams per ton, 45 grams per ton, 29.3, 10, 7.31. Really, really nice little finds here for this company. And this is something I pulled out of the presentation. I wanted you to see what they're doing. This is their development plan for 2020, 2021. They're going to explode their drilling program. Start from the right. They announced a 200,000 meter program with 8 drill rigs punching holes all over the place, finding that resource. That's after they did 25,000 meters in August of 2020, where they started finding those holes. And they started off by doing some airborne gravity. We start over here on the left. then they did some staking, then they did regional till program. That's where they got those till results that we talked about earlier, where it's about 15 grams per ton gold, they think, on average on some of those finds. So they've gradually, if you move left to right from March of 2020 to August 2020, found some amazing results. And they're going to take about 10 times the drilling they did in 2020, starting in January 2021, starting now, and they're just going to explode it out. And when they start hitting some drill results, it's going to start popping news, and you're going to see that news get investors interested, and you're going to start to see what kind of zones they have, what kind of deposit they have. Eventually, they'll get on to making a preliminary economic analysis at some point as they start to figure out their costs. That will come in the future. They haven't announced that yet, but this is where they are. They're in early exploration. They found some really good stuff through their till, their airborne gravity, through their drill program, and now they're going to blow it out. And now they think that they may have found something similar to Fosterville in Australia. And if they have, this could be a really nice investment for you guys, a nice project. Now, I wanted to get into capitalization. They do have some shares outstanding. They have basic shares outstanding about 148 million. Overall, they're capitalized about $639 million company. That's a fairly good, actually, that's really good if you're looking to get into the gold space. When you're talking about $639 million company in the gold space, that is a healthy gold company. And look at the share ownership here on the bottom. Palisades Gold, which has invested over 400 million in projects, owns 33% of the shares. They're a major player in gold, especially in Canada and North America. Eric Sprott, the man himself, owns about 18%. You want to take about taking a stock in a $639 million company. Eric Sprott owns about a fifth of that. That is some serious coin going into this project, and that is some belief from a major player in this space. Novo Resources, 11%. Novo has developed a lot of good projects. They have a lot of expertise. They're going to be assisting the company with some advisement, and they own over 10%. Rob McEwen, the famous Rob McEwen, owns 7%, another 8% by institutional investors. Now, what is interesting about this, you're seeing the institutional investors take very large stakes in this company when they're still in early to mid exploration stage. That's how impressive this project is. You're talking about major people and institutions moving in with big money on these drill results. That is a sign of belief. That's what we're talking about. Big belief in this company and what they potentially have found. And again, this isn't greenfield. There are other companies out there finding some good gold deposits. This is more closer to it's not a brownfield from a development perspective, but from an exploration perspective, you're more brownfield here. You're dealing with some knowns here. And as they blow out this humongous 200,000 meter drill program, you're going to start to see more news, and we'll start to see what it looks like. But you see some big early believers in this project. Of course, 4% management and insiders and 19% others. That could be some retail investors and other large investors as well. That's a nice share ownership structure because it's dominated by some big players, but you've got some float out there for the retail, and you've got some really big names in it. That's a good story to the market. That's what you're going to have, a very consistently developed share capital structure, and that's going to attract some longer term investors in this project. That's going to keep the money flowing into this company as they begin to do more of the exploration, and they're well capitalized with 67 million in working capital to affect that 200,000 meter drill program. You just look at this and go, oh my goodness, this has potential to be big. Now, we don't have the final numbers on it yet. I want to warn you, it's still exploration stage, but man, look at all of the positive signs for this. Lots of positive signs, big guys putting their money in it. They've got the money, now they're going after it. And the early results have been so encouraging. I want to talk to you a little bit about the company. CEO and Director Craig Roberts is a mining engineer with 30 years of operations consulting and investment banking experience. His background includes work on feasibility studies for numerous mining projects worldwide and investment banking due diligence roles and over 200 institutional equity financings. In other words, he knows how to go get the money, and he knows how to evaluate cost and profitability, that's feasibility studies, on miners. That's what you want, because he's going to tell you, he's going to know, is this going to be profitable? Is this going to be good? Can we get the money for it? Obviously, they've already gotten the money for it. The next step is doing the exploration and then the feasibility study. They've got the expertise right there on staff for that. A founder and president, Dennis Laviolette, has over 10 years of experience in mining and capital markets. He worked on production exploration uh, as an exploration geologist in Timmins, Kirkland Lake. Now, there's Kirkland Lake, Fosterville, right there. That expertise being brought to this company. You see the tie-in. Red Lake, major mining district in Norway and Ghana. So he's been around the world, looked at a lot of different projects. He later worked as a mining analyst with Pine Tree Capital and is the founder, director, and executive chairman of Gold Spot Discoveries. He currently serves as director for Extra Gold Resources Corp. Then you have Dr. Quentin Henne, the director. He is an economic geologist with 25 years of exploration experience, mainly gold related. He led exploration teams for Homestake Mining, Newcrest Mining, Newmont Mining, and he serves as the founder, chairman, and president of Nova Resources. There's the tie into Nova that I was telling you before, who's found a lot of great projects, and is founder and director of Irving Resources. He's taken a lead role in a number of discoveries, including significant involvement in high-grade Swan Zone discovery at where? Fosterville, where it has similar geologic profile to what we're seeing here at the Queensway project. Again, you see that tie-in. You're bringing the expertise from what they found in Australia, that great project, over here to Canada. If the gold is there, they're gonna find it. The great team here. The Chief Operations Officer, Greg Matheson, is a professional geologist with over 14 years of experience managing grassroots exploration through advanced exploration projects. And he's a former exploration manager of Northern Gold Mining. He discovered the 2 million ounce Garrison Gold project. So has experience with the exploration. So that is a really good team for you guys to have more people on their team. I encourage you to go look at their company website, but definitely the expertise there. That is a class management team. You can have confidence in them. At least I have confidence in them. I'd like to see where people are serially successful, people who know how to mine in that district, people who have experience, and people who know the geologic profile of the project they're going to be exploring and developing. And that's what that management team has. Now, as promised, I will give you the references to the banks, the Gold Supply Cliff by Crescat Net, the research, and the information from the Fosterville mine owned by Kirkland Lake. It's all right here. You can pause the video real quick, take down these URLs, and go research that information for yourself. I wanted to put it in there though, so you know where I got the information. We're going to stop the screen share, and I'm going to talk to you for just a moment. Remember the gold supply cliff that's coming. Remember what I've been emphasizing on my channel lately, looking for exploration projects. We're looking for that gold. We're looking for that silver. We've reached the silver cliff already, in my opinion, because we've been running deficits to what we're producing every year already. So I think we've hit the silver cliff. We're going to hit that gold cliff. And so we're looking for good deposits that are economic, that have good stories, have good management teams, that are tier 1 district. You're starting to see the theme here. This company matches all of those. We'll have the tickers for you down in the description if you're interested, but this looks like a really good story. And if you're interested in exploration, adding exploration companies to your portfolio, this has the potential to be a granddaddy based on what we've seen so far. Now we have to see them fulfill their 200,000 meter drill program and to provide those results, but they certainly have the team to do it. They have the financial backing to do it. The geologic structure looks like it there. The early results are confirming that. So this looks like a potentially really good play for you guys to add to your investment portfolio. If that is what you're looking for, I think that's going to do it for the presentation today, guys. Thank you so much. Again, we try to bring you high quality targets in the gold and silver miner space. I think we have done that. That'll wrap the video for today. Please leave your comments below. I've been happy to answer as many questions as I can for you on this. And until next time, this is Rob Keens with goldsilverpros.com.